Hello, everybody. Today we are going to be discussing the banking system. So, the first topic on our agenda is the different types of banks that are present in the banking system. So, the first type of bank is known as a retail bank. Now, this bank primarily focuses on consumers. The next type of bank is known as a commercial bank. And these types of banks usually focus on businesses as clients. Investment banks focus on raising capital for clients, which are usually larger corporations. Central banks manage the money system for the government. They have a very vital job because the government depends on them to eventually manage their money. Credit unions are non-profit organizations that are owned by the customers and offer many of the same products. Savings and loan banks use savings from customers to give out loans and then repeat. The Central Bank of America is known as the Federal Reserve. The Federal Reserve is the central bank of America, and it uses open market operations and other tools to control monetary policy. Ultimately, it's because of the Federal Reserve that lets America's economy flourish the way it currently does. How banks affect us as consumers. In everyday life, we are all considered consumers, and banks affect us in our everyday lives. Banks loan out money to people who are then expected to pay it back with interest. Banks will give out money based on a person's credit. Their credit is based on past loans and timely payments. This all is added together and comes in the form of a credit score. As stated before, the Federal Reserve controls monetary policy for America. So because of this, the Federal Reserve uses tools such as interest, federal funds rate, and the discount rate to control and to better help us as consumers. To further elaborate on these terms, interest is money paid back regularly at a particular rate for the use of a loan. Moreover, interest can also be used for the repayment for the delayment of a payment for a particular debt. Federal funds rate, or the interest rate at which depository institutions lend reserves to other depository institutions, and this correlates to the reserve requirement set by the Federal Reserve. Lastly, discount rates are the rate at which banks and other depository institutions borrow money from the Federal Reserve. Now, it's time for the practice problems. The first practice problem is, if I am part of a big corporation and need to help raise capital, what type of bank will I go to? The second practice problem is, what kind of bank is the Federal Reserve? What does the Federal Reserve control in America? What are the tools it uses to control these operations? Now, the last practice problem is actually an activity, and the activity is known as the market. So, the objective of this activity is to divide the class into multiple teams, and to give each team a type of bank, person, or corporations. Next, have the teams find the banks that would be most useful to each other and interact. Now, have the teacher be the central bank and have the kids explain why they chose the bank that they chose. That concludes our video. Thank you very much for joining us.